Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a beautiful day in the markets today. And in today's action, the S&P and the QQQs both hitting new all-time highs. The S&P has been green in 10 out of the last 11 sessions, and the QQQs have been green for 11 of the past sessions in a row. A historical rally of sorts. And as a matter of fact, you can see it in the sentiment shifting all across the board in the markets as the markets discount the war in the Middle East situation and move into the earnings season that is upon us right now. And you can also see that in the positioning, not only the sentiment here, guys. Shorts have absolutely collapsed in the markets, completely unwinding their positions at one of the fastest paces that we've seen in the last 8 years. Additionally, total call option volume has also hit the highest amount on record that we've seen throughout this year so far, just once again showing the shift in the positioning structure. And you also have smart money, dumb money confidence, whereby if you take a look here at the end of the graph, retail, who unfortunately panic sold the bottom to the institutions and loaded up put options at the bottom as well, they have now flipped, getting back to the market at an extremely rapid pace. And all of that considered, we are now at all-time highs. So in today's video, guys, we have a bunch of things to talk about. Number one, we will talk about the news highlights of the day, anything out of the Middle East, and a few other key statistics to pay attention to. But then we got to get into some earnings. So what we'll do today for earnings is that we are going to go over some of the major banks. We'll do a quick little broad recap of the major banks, their take on the situation in the Middle East, but also their take on the health of the consumer. Specifically in terms of numbers, we will look at JP Morgan and Bank of America, the two largest players that have reported so far. And after that, of course, we're going to get into ASML earnings. ASML had great earnings. However, the stock came down. It's been on a tear for the past year, so it's not surprising. And it did contribute to bring down a number of different semiconductor names today, which in all reality were due for a pullback. So this was kind of a perfect pretext for some of those pullbacks in some key infrastructure names and semiconductor hardware. So we're going to take a look at those earnings after we're done the news cycle. Thereafter, we will get into the charts, taking a look at our technical analysis here on the S&P, the Qs, check on the rotation amongst different sectors in the market and see which ones are offering the best risk to reward. Thereafter, we will get into our big tech names because big tech has been on a very big tear recently. A lot of these companies are still very attractively valued in spite being off of the recent lows, and some of them are also presenting very decent trading opportunities. So we'll go over this list and derive what those are. And then at the end of the video, of course, we'll get into the biggest gainers and losers of the day, focusing on our key themes that we've been very vocal about here over the course of the past 3-4 months since the year started, and derive any possible opportunities either for trend continuation style setups or possibly even some names that have been out of favor may be coming back into favor as the market is now embarking into a bit more of a risk on sentiment. And you can see that with some companies that were former big stars in the market because of certain themes and narratives, right, that have been out of favor for the past 6 months. And no, I'm not talking about software. I'm talking about the pure risk-on names. Names like Okla, which have just been down, down, down since the start of the year. And oops, trying to come in here for a bit of a pop and a trend reversal. But not only them, quantum computing, which has been down and out since October, starting to actually manifest the early signs of a bit of a trend reversal pattern because at this point in time, sentiment in the market is shifting. And you can notice that when you look at some of the most risky names, names with no revenues that were former stars in the market, and now getting a bit of an upswing here. Rigetti, as you can see, IONQ. So we'll do that analysis at the end of the video and determine how powerful that risk-on sentiment can possibly be for the markets. And that should be it for today. So a lot of things to cover in today's video. Let's strap in, lock in, and let's get into it, shall we? So the S&P up 8.8%, the QQQs up 1.4%. A beautiful day overall in the markets. That being said, in terms of your market rotation here, once again, big tech led the charge. And, you know, there was a lot of memes in social media in the last month, you know, calling the Magnificent Seven the Lagnificent Seven because they were just lagging so hard behind the market. But in the past few days, you will notice that they have carried the markets higher, and you have some explosive moves off of the lows in many of these companies. So beautiful day for a lot of the largest companies in the world. Financials also not doing too bad. The credit card companies coming back in a big fashion. The banks slightly mixed, but you got some nice moves here in private credit and also the financial data companies like SPGI and Moody's. On the bottom half here, healthcare, unfortunately not the best day. Still one of your softer segments of the market. And to the bottom half here as well, industrials. You'll notice a lot of data center plays or infrastructure plays that were down as a result of the ASML earnings price action. Not because ASML had bad earnings, but as I said, it offers the perfect pretext, the perfect cover-up for a lot of these names to pull back, because many of these names, guys, they were up huge in the past 2 weeks, almost up every single day. And today, just a bit of a consolidation day. And the bottom half of the market, the rest of it, real estate, utilities, energy, a little bit muted. Today was definitely another day that was dominated by big tech. And it's about time, right? Because they've been out of favor for so long. Look at Tesla here, up 7.62% after releasing their new chip. Moving on to the one-day relative, you'll see this dispersion even better here, to where technology and consumer cyclical led the way. Consumer cyclical, I will remind you that it was mostly Tesla's action right there. Even Amazon was red. There were a few other names. Travel is one of the more popular one, but you know, some of the clothing brands and other companies of that nature, some of the restaurants, we're not doing the best today, but overall consumer discretionary did have a bit of a bump. Communication services up. That's largely a byproduct of Google, Meta, and Netflix being higher. And then also to the upside, we had financials. Financials putting in a very nice move from the local lows. The rest of the market, however, suffering a little bit. So after a 1 week relative basis, now that we've been up 10 out of 11 days in the S&P, well, here are your big winners. Consumer cyclical, which has largely been dominated by Amazon's massive push towards the highs. Technology, which has been Mag 7 and a lot of semiconductors. Communication services, which has been dominated by Google, Meta, and Netflix's runs. And thereafter, you got real estate, you got financials a little bit with the bank earnings, which are very good, by the way, and industrials. So before we get into more technical analysis, guys, let us get into some of the news highlights of the day and also the statistics. As we stand right now, the Fear and Greed Index is back into greed territory. We've recaptured a lot of momentum right here, closing above now all of our major moving averages. Stock price strength, net new 52-week highs and lows on the New York Stock Exchange is getting better, but still, so many companies have been beaten down that although we've had a nice rally, many of them are still far away from their all-time highs, and your stock price breadth right now has recovered to a more neutral status. Put and call options, they are down significantly. Put to call ratio has been coming down, and the VIX also coming down, even though the VIX is currently still a little bit elevated, just under 20. Definitely a far cry from what we saw a few short weeks ago. So there you have it, the market pivoting into greed territory as the S&P and the Qs break new all-time highs. Now, some news out of the Middle East, just to recap some things that happened today, which led to positive further momentum. U.S. and Iran in indirect talks to extend the 2-week ceasefire. Nothing official so far. The U.S. and Iran have been in indirect talks aimed at extending the 2-week ceasefire beyond its expiry on the 22nd of April, as Pakistan's army chief arrived in Tehran to continue the mediation efforts. Caroline Leavitt, the White House press secretary, denied on Wednesday that the U.S. had formally requested to extend the 2-week ceasefire, but added that Washington remained very much engaged in these negotiations. A second round of negotiations would be very likely had in Islamabad, she said, adding that the White House feels good about the prospects of a deal. But potentially here, over the next few days, you will have J.D. Vance and other members of the delegation, of the ceasefire delegation, obviously traveling back to Pakistan to possibly embark into the second round of negotiations after the ones last weekend, unfortunately, fell a bit short. Moving on a bit further here, you had some tweets out of President Trump, but the most notable one today was this one. China has agreed not to send weapons to Iran. China is very happy that I'm permanently opening the Strait of Hormuz. I'm doing it for them and also the world. The situation will never happen again. They've agreed not to send weapons to Iran. President Xi will give me a big fat hug when I get there in a few weeks. We're working together smartly and very well. So there you have it. That was one tweet that came out today. We've covered the news out of China in the most recent few days. Obviously, there was a lot of pressure behind the scenes that China was putting on Iran to continue the negotiations, because we know that China does obtain a fair amount of products here out of the Strait of Hormuz, and that the blockade currently does not favor them. So it's nice to see China continuing to exert the pressure that they can to resolve the situation as quickly as possible. Now, moving on further to some statistics here. As we know, the price of the barrel of oil remains stubbornly high still, even in spite of the ceasefire, because of the blockade currently underway right now and the continuous pressure in the Middle East. However, this has rendered the U.S. to export the most amount of oil that it ever has on record. The U.S. exported a record 12.7 million barrels of crude and refined products per day last week. That is the most ever. There'll be approximately 13 million barrels soon. So the U.S. definitely stepping up here, a very big uptick in terms of their exporting capacity. Moving on further here, these are the statistics that I showed in the introduction, but just to recap, you do have shorts absolutely collapsing over the past few days from one of the highest levels that we've seen in the past few years immediately after the ceasefire, shorts have been unwound. It's led to a tremendous amount of short covering, which was one of the reasons why the markets have been pushing so much higher. Are shorts unwinding their positions and repivoting long, of course. But additionally, at the same time, you do have retail coming back in and being more bullish than they were previously, right? You might remember we referenced the put to call ratio numbers a few weeks back at the height of the sell-off, hitting one of the highest levels in the recent 5-year period that we do measure. And now that is completely flipped. People unwinding their puts, buying calls on the other side of thing. Call option volume hits record 2026 highs in the current market environment. Moving on a bit further, smart money, dumb money confidence. What you need to always pay attention to on this chart is the flip. I do apologize, sentiment trader. They put this little, they highlight it over maybe so you can't see the recent developments in price action. But if you've been on the channel here for the past few weeks, we bring this one up every few days. And obviously, amidst the sell-off, you did see retail really panic sell, and they came all the way into some lows here, guys, as institutions were gladly buying up everything that retail was panic selling. The institutions now have been slightly offloading their positions, but still do remain very clearly long. And the people that have been buying the dip very aggressively have been retail. Unfortunately, they sold the bottom, are getting in higher, which is a story as old as time, obviously. Moving on a bit further here, you also have a historic win streak on the NASDAQ, 13.7% over the time span, the last 10, 11 days. The biggest recovery since 2022 and the third largest since 2009. It is the longest streak since 2019. Very, very strong. Here it is. So 11 days in a row. This chart shows 10 because it was posted early this morning before the market closed, but you're now at 11. So obviously, this rally is not going to last absolutely forever, but the sheer amount of space that the bulls have created off the bottom makes it quite easy for them on any pullbacks to create higher lows and go for that trend continuation structure here as we move into the earnings season. And a lot more emphasis will be put on cash flows, EPS, revenues, as opposed to media and narrative headlines surrounding the Middle East. Not that they're not concerning, but at least now we can get back to, analyzing companies for what they are, which are, in terms of their fundamental earnings. And the earnings season is slated to be quite good, at least from what we are seeing early right now from the financials earnings that we're going to get into very shortly here. And last but not least, there was a few big tech headlines today, but for the sake of saving time, we will save them. Nothing truly groundbreaking today. There was a very interesting interview with Jensen Huang. I was going to show some clips, but we got a lot of earnings to go through, a lot of charts to go through. So maybe I'll show it tomorrow. But all you need to know is that AI agents, right? The subject of a lot of discussion in the market since last October, suffice to say, AI agents are exploding in popularity. Here we have a table. The CAGR, compound annual growth rate here, across the world in aggregate is going to grow 43.3% on an annual growth rate through 2030. You'll notice the amount of money that companies are currently spending right now and will be spending in the future, right? Very massive. 18.8 billion in North America, 16.9 billion in Asia Pacific, $10 billion in Europe, and the rest of the world, $2.6 billion, for an aggregate spend of around $48 billion. So as you can clearly see, guys, the AI quote-unquote revolution is nowhere close to being complete. And as a matter of fact, when we go through the ASML earnings later, we will show you that. But we will also show you tomorrow, TSM has their earnings coming up. We already have the revenue numbers, but it's going to be all in the guidance from the CEO tomorrow, and also the profitability metrics. So at least we are getting some good visibility here for the next 5 years in terms of the sheer size and scale of the AI build out, and consequently, a lot of the agents being deployed, and then consequently from that, the efficiency and productivity gains that you will see on a per employee basis. So that's everything for your news headlines of the day. Hopefully you guys enjoyed that. Now let's jump into our earnings segment. And we're going to start it off with the banks. I know you guys want me to start off with ASML, but bear with me. The banks are very important for a few key reasons. Number one, we want their guidance in terms of the macroeconomic landscape that we're looking at here, possibly for the next few quarters, but also we want their ideas on the health of the consumer, obviously. And if the banks are nervous about the health of the consumer, are they increasing the infamous provisions for credit losses? Arguably, if the banks would be worried about the health of the consumer and the jobs market, they would possibly be increasing the loan loss provisions, the amount of money they set aside on a quarterly basis for anybody that would be defaulting on their credit cards and their loans. It's a very key insight into our banking analysis. So just at a first glance, we're not going to do each of one of these individually and spend 10 minutes on every one of their earnings because you got a lot of them, right? You got Goldman Sachs here, you got JP Morgan, Citigroup reporting as well, Wells Fargo, Morgan Stanley, Bank of America. So there's a ton of them. But what I do want to tell you guys is that record profits were seen all across the board. If you take a look at Goldman Sachs, record amounts of profits, nice beat on EPS, nice beat on revenue. Even if you look at an ETF manager such as BlackRock, record profits, beautiful beat on EPS, beautiful beat on revenue. If you take a look at some of the major banks, such as JP Morgan, record amount of profits, once again, beautiful beat on EPS, beautiful beat on revenue. If you take a look at Bank of America, beautiful beat on EPS, record profits, beautiful beat on revenues as well. I think you guys are pretty much getting the point right now. Citigroup, beautiful beat on EPS, record profits, and beautiful revenue as well. Suffice to say, the banking earnings so far, whether it's from the investment banks such as Morgan Stanley or Goldman Sachs, look at Morgan Stanley, 13% beat on EPS and a 4.25% beat on revenue. Whether the numbers are from your commercial banks that have commercial loans and client loans as well, such as Bank of America, Wells Fargo, Citigroup, etc., their earnings were very, very good. Only Wells Fargo dropping the ball a little bit with their net interest income guidance and the amount of money that they made on a quarterly basis, but still profits were very good. They're the only company that had somewhat lackluster earnings, but in aggregate, the entire financials landscape, at least the ones that are reported so far, have been very solid in terms of revenue generation and in terms of profits. The ones we will pay closer attention to today will be Bank of America and JP Morgan. Number one, because they have the most amount of institutional clients and also consumer clients at the same time, and they can give us some very good perspectives as to how those two things are doing. So number one, let's move into Bank of America. As we said, record earnings, and you can see that nice little pop on their share price this morning, up about 2%, a very strong rally from our local lows. If you take a look at some of the highlights right here, Bank of America tops estimates as CEO Brian Moynihan says consumer banking is healthy, contrary to possible popular belief right now. If you go on Twitter or something like that, the banks reported earnings and they crushed it. And here are the rest of the highlights. In a sign that the bank's borrowers weren't deteriorating, the firm posted a $1.3 billion provision for credit losses in the quarter, lower than the $1.5 billion provision in the year earlier period, and about $190 million below the consensus. Suffice to say, if the banks were worried about the macro situation, about the jobs market, or the health of the consumer, you would not be decreasing your loan loss provisions. You would actually be increasing them. And I think Bank of America, who has tens of millions of clients, probably has the statistical data and the financial modeling to let them take the best possible decisions. They're not just doing this for fun, right? So that being said, that was very good, and JP Morgan was largely the same. Right now, the company is performing very well. The consumers are spending, the credit quality is very good and improving, and you see the corporate clients actually use their lines a little bit more, talking about lines of credit. We all face the same uncertainty, CEO Brian Moynihan says, but right now, the US companies and consumers are doing well. And frankly, our global companies are doing pretty well too. Taking a look at some of the Bank of America numbers specifically, we're not going to go through every single one of these, but still, very nice return on equity, which is a closely monitored metric from the bank, and return on total capital employed, also very strong. You will see here that the revenue numbers, net interest income, sales and trading, asset management and fees, all moving higher. Additionally, if we take a look at some of the liquidity metrics, because when you look at banks, you want to know, are they well capitalized, right? CET1 ratio, which is very closely watched, is at 11.2%, above the regulatory minimum. So no squeeze right there on the liquidity situation for Bank of America. They were nice enough to provide us as well with their own inflation estimates for 2026 in light of all the recent data received from the situation in the Middle East. And you can see here that 2026 has an inflation print roughly of between 3.3 to 3.5%, 3.3 globally, and then 3.5 in the United States. However, key piece of data here, do they expect this to continue on a structural basis? At the current time, no, they do not. Inflation rates for 2027 estimates from Bank of America are 2.4% for the United States and 2.5% for the rest of the globe. That is very good. And you can see these payment spends and year-over-year growth metrics does not show a deterioration of their client base. That is for sure. If we take a look further down here, we've already mentioned the CET1 ratio. Now, oops, I don't know why I highlighted all that. CET1 ratio was very solid, roughly in line with what they've had recently as well. If you take a look further down here, guys, one thing, we're not going to go through everything here, but just the things that we really want to pay attention to when we think of the banks and we think of the whole consumer landscape right now, right? So if you move a little bit further down here, net charge-offs. This is a very important one right here, guys. The net charge-offs, as you can see, as a percentage of assets, 0.48. That is lower than last year. We've had an uptick in relation to Q4 of 2025, but still not that many charge-offs in relation to their entire client base. You do not really see an acceleration period at all at the current time. Provision for credit losses, this is also very important and to pay attention to, right? Provision for credit losses, you can see not really changing over the past few quarters. So if the bank, as I said, was very nervous about their client quality, whether institutional, commercial clients, or consumer clients, you would see an uptick in the provision for these credit losses. At the current time, you do not see it. You might be wondering about credit cards. Well, consumer net charge-offs up here of 1.1 billion declined versus last year. And as a result, credit card charge-off rates were 3.64% versus 4.05% in the first quarter of 2025, and a slight uptick here from the fourth quarter of last year. So we cannot derive that consumers are panicking, nobody's paying that back their loans, or anything like that. And you can see that in the bank's provision for credit losses. That is Bank of America. Solid report. The bank is well capitalized and does not see a deterioration in their client base. Let's have a look at one of the other major banks, this time around, looking at JP Morgan. JP Morgan had a very good earnings print. However, the stock has not moved, but we got to look internally, right? So sales and trading, whether it's fixed income and equities, they made a lot of money on their trading desks, a lot of money in terms of asset management as well, but that should not be the focus. If we know that the narrative is in relation to inflation and the health of the consumer and client credit quality, especially with the whole private credit situation going on right now, right? Is the bank nervous? You can see here beautiful earnings by JP Morgan. Let's see what they had to say. So here's the headline. JP Morgan tops estimates on Wall Street, but Diamond flags increasingly complex economic risks. I haven't heard JP Morgan, I haven't heard Jamie Dimon be bullish in the last 5-6 years, but then again, that's why he's such a good salesman, right? Everything is very uncertain right now. So make sure that you guys deposit your money, invest your money with JP Morgan Asset Management Division, because we are ready for everything. That's why he kind of takes on the skew that he usually gives publicly, but his shareholder letters are usually always very positive. The company said net income rose 13% to a record amount of profits, and revenue increased 10%. Definitely not signs of deterioration right there. The firm's provision for credit losses was $2.5 billion, about $500 million less than the street account estimate, and that's a big number, and a sign that JP Morgan's borrowers remain healthy. A year ago, the firm's provision was $3.3 billion. So not only did they come in under the street's estimate, but they came in significantly under what we had last year. Now, the bank did say that there is a complex set of risks, and that was a common theme across many of these banking earnings. They have to acknowledge the current situation in the markets, obviously. Moving on further, here's what Jamie Dimon had to say. There's an increasingly complex set of risks, such as geopolitical risks, tensions and wars, energy price volatility, trade uncertainty, and large global fiscal deficits and elevated asset prices, talking about the sheer amount of debt that governments around the world have taken upon themselves. While we cannot predict how these risks and uncertainties will ultimately play out, they are significant and they reinforce why we prepare the firm for a wide range of environments. And this should be the takeaway for each of you individually as well, right? Notice how he says, with all his tens of thousands of employees, statisticians, right, financial models, and every single piece of data that he can possibly get his hands on, what does he say? Well, we cannot predict how these risks and uncertainties will ultimately play out. They are significant, which we also say on the channel, right? And they reinforce why we prepare the firm for a wide range of environments. And that's been exactly what I've been telling you guys also during the recent sell-offs during February and March. Do not try and predict the markets. However, you can engineer your portfolios, whether trading or long-term investing, to be prepared for the wide range of environments that the market dynamics can possibly throw at you. So that's a big takeaway right here. If you take a look at more takeaways from their earnings slides, you will see once again that this bank is extremely well capitalized with a CET1 ratio of 14.3%. Return on total capital employed is 23%. Very strong numbers from JP Morgan. That's why they are the best bank in the world. If we move a little bit further here, what I also wanted to show you, the SLRs have been dropped. That was a requirement by the Fed that was kind of relaxed last year. Still, the liquidity ratios for the banks are very strong. The LCR as well, over 100%, which is exactly what you want to see for these firms. It just means that they're able to, you know, absorb any losses that they may have on any of their loans, as total deposits and total reserves they are outpacing the sheer amount of loans that the bank is giving out. So the leverage factor that they're employing is not dangerous specifically, right? That's what a few of those liquidity metrics actually measure. If you take a look here as well, card services and net charge-offs, right? Take a look at the percentage amount, 3.47%, a slight uptick from the fourth quarter of 2024. However, better than at this same quarter last year. So the bank, and obviously, as we said, right, net charge-offs of 2.2 billion, that came in under the analyst estimates, and the bank is putting less money aside for potential charge-offs in the future. So JP Morgan echoing exactly what Bank of America said as well. Their client base is healthy. However, all the banks acknowledging the risks at the same time. So rather than going through each company's earnings slide specifically, I just asked AI here to pull anything in relation to macroeconomic commentary for the ongoing situation in the Middle East, and also any commentary from the earnings calls as to the health of the consumer. And you will see that they mostly say the same thing. Basically, that the macroeconomic environment right now is challenging and faces and brings some uncertainties to the table, but that the health of the consumer was very good. We'll just go through a few of them here. JP Morgan, Jamie Dimon saying the US economy was resilient, with positive tailwinds being fiscal stimulus, deregulation, AI capex, Fed asset purchases, but warned of the increasingly complex set of risks, which were the geopolitical tensions, war, energy volatility, trade uncertainty, etc., but did say, as we said, that the firm was prepared for the wide range of outcomes. Brian Moynihan from Bank of America saying that the economy was very resilient, with GDP growth in line with a 2% range, but that they are monitoring the Middle East conflicts for energy and trade impacts. Goldman Sachs' David Solomon highlighted macro weighting on sentiment as the quarter progressed, and as volatility rose amid AI disruptions, private credit uncertainty, and the Middle East conflict, right? These are all the things that have been plaguing the market. AI disruption, private credit, Middle East conflict. So he says higher uncertainty overall, and that CEOs are cautious about commodity prices feeding into the economy, but still, they did generate record profits. Citigroup, Jane Fraser, the CEO, noted that the global macro has weathered shock after shock, which is a good thing. But the Middle East conflict is hitting Asia, Europe harder than the US and Brazil. Prolonged conflict raises inflation risk and could prompt more restrictive central bank policy and increased macro uncertainty. These things we know. So this is just them acknowledging these things. Notice how they're not really sounding the alarm bells. They're just acknowledging, as they have in many years prior. They did the same thing, guys, last year with these Q1 earnings during the entire tariff situation. They acknowledge the situation, but then they say they're well capitalized, well prepared. And when you look at aggregate consumer health, it's very strong as well. Health of the consumer, broad consensus, is resilient overall, with healthy spending growth and stable to improving credit metrics and strong labor market numbers. You know, it's a no hiring, no firing environment right now. So JP Morgan, consumers and small businesses remain resilient. Consumer spend growth above last year's pace, despite market and gas price volatility. Credit performance fundamentally healthy. Okay, Bank of America, resilient American consumer remains the engine of capitalism. Spending growing at a very healthy 4% rate, and debit and credit card spend up 6% per year, despite sharp energy price rises. Asset quality also stable to improvements, and card delinquencies and net charge-offs, as we said, down year over year. Goldman Sachs, they're limited because they're an investment bank, right? But they did say that CEOs are watching for commodity prices to translate into aggregate consumer demand. And they also said it's not yet material, but caution for Q2 if energy stays high. And we know that, right? Truly, guys, at the end of the day, even though you may be spending more at the pump and companies may be spending more for their input costs, you know, oil would have to stay extremely elevated for like a total period of 6 months before people actually really start feeling it at the bottom of their paychecks, right? Citigroup saying that U.S. card portfolio is of very high quality, delinquencies and losses declined, and consumer spend was up, okay? Wells Fargo, consumer resilient in the aggregate, but increasingly bifurcated. Once again, talking about the, the dispersion between the lower class and the higher class, upper echelon of spenders, right? Spending held up in early 2026, and rising stress signals for less affluent customers via confidence indicators and balance sheet trends, because they are more exposed to higher rates for longer and energy prices, obviously, right? And then Morgan Stanley, they also have limited direct consumer focus, as they are more an investment bank and wealth manager, noted strong client engagement amid uncertainty, but no granular news on spending or credit commentary. So there you have it, a quick little summary of all of the banks and how they're feeling and all of their main takeaways. Hopefully you guys enjoyed that. The moral of the story, all banks reporting record profits, most of them acknowledging the macro situation ahead of us right now, but also not predicting for significant declines in the economy. That's the big takeaway, right? So keep that in mind as we move through the rest of this earnings season and we get a couple more banks reporting. No more very big ones, but small and regional ones will be reporting soon as well. Now, that out of the way, you guys might think, let's get into some fun stuff, man. Let's stop talking about the banks and the net charge-off ratios. But it's very important, guys, for analysis of the macro, because the banks have all the data. They have all the data, right? So if you see a deterioration somewhere, you will see it first in the bank earnings. That's why I pay special attention to these earnings. But record profits, decent commentary on the consumer, net charge-off rates down, credit card rates not too bad, right? And resilient spending. You have a landscape, right, where the consumer, despite the negative commentary surrounding the situation in the Middle East, right, you have a consumer that is fairly resilient and for the most part fully employed. And that's what really matters here at the current moment. So now let's get into maybe a bit of a more fun one, which is ASML. So ASML reporting earnings very early today. Now, that being said, they had very good earnings, guys, okay? So they beat on EPS by 9.4% and beat on revenue by 2.4%. Their current last quarter was extremely good. But however, the problem with this one, you might be wondering, yeah, if they had such good earnings, why was the stock down? Well, I mean, guys, they're up a ridiculous amount. Look on the right-hand side right here. You'll see that on a 1 year or a year-to-date basis, rather, they're already up 31% when the indexes were flat. And additionally, on a 1 year basis, they're up 118%, right? So if there was any little thing that Wall Street could pick apart, obviously it could lead to a little bit of profit taking, considering the fact that from the lows here, the stock into earnings was up 20%, let alone all the work that they've put in over the past year. So here are the key highlights and takeaways from those ASML earnings overall. Number one, they crushed it on the current metrics. Gross margins were 53. We already talked about sales beats and EPS beats, but gross margins also very strong at 53 versus the consensus of 52, and also profitable, very profitable. ASML increasing their profitability. As a matter of fact, net income margins for this quarter, 31.4%, which is extremely good. You'll notice a quarterly trend here of improving net margins. Now, at the highest amount that even I've seen in the last 2-3 years of time, very strong net margins as the orders continue to pile in. However, the disappointment for the company was in the Q2 guide. Net sales coming in under the expectation, gross margins also coming in under the expectation. That being said, guys, I've been an investor in ASML for the past 6 years. It's always like this. They are a very lumpy sales pipeline company, and especially in current times. Keep in mind, a lot of the foundries, such as Intel, such as TSMC, or the memory makers, such as Samsung, SK Hynix, and Micron, they're ordering new machines, but at the same time, they're building new factories. And ASML only recognizes the revenues if they're able to deliver those orders in a set quarter. So management does their best to give some guidance for the next quarter. However, if you're Intel or TSMC and you just don't have the room for the new equipment to be put in place yet, well, then you won't take delivery. If you're TSMC, you might say, yeah, I need these machines by next quarter. But then you call ASML and say, listen, we're a little bit behind on our construction schedule. We thought that the factory floor would be ready for them, but can you push them out an extra month? Well, ASML doesn't get to recognize that revenue necessarily during that quarter, right? So it is a bit of a lumpy sales pipeline. You don't really need to look too much into the quarter over quarter guidance, right? Even though the price action will respond to it. What matters more, guys, is the full fiscal year guide, and it was very good, right? So net sales here was increased from 34 to 39 billion. Now they've raised the floor to 36, and they've raised the top end also to 40 billion. That was very good. So it just goes to show you this company is operating on all cylinders, record amounts of orders for their products as well at the same time. If you take a look here at some of their revenue growth curves, you'll notice that ASML is a mix of two different things. Number one, yes, they sell their equipment and their machines, but number two, they have a big servicing division. And the servicing division has been contributing more and more to the revenue on a per year basis. They have a lot of engineers. These machines are very complicated, right? So whenever they sell you a machine, they will also sell you a servicing plan. So that way they can come service the machines to make sure they're always in tip-top shape and proper working order. So very nice revenue growth here over time. This is from 2016. You will notice that revenue is lumpy. Notice it's not as smooth as something like a Microsoft or something like an Apple or something like a Google, right? It is somewhat lumpy, but over time, it's been making very good strides year over year. And that's what you really got to focus on, both on net system sales, but also on your net services. So I figured I should show you this just to show you that it's always been lumpy and it always will be lumpy just because of the nature of the business. Now, in terms of management's guidance here, very strong here, guys, okay? So the semiconductor industry's growth outlook continues to solidify, driven by ongoing AI-related infrastructure investments. Demand for chips is outpacing supply. In response, our customers are accelerating their capacity expansion plans for 2026 and beyond, supported by long-term agreements with their customers. We've seen this in the memory names. Instead of taking on 6-month orders or 1-year orders, a lot of the hyperscalers are locking in contracts for 3 to 5 years. In the past months, our customers have increased their expected short and medium-term demand for our products. This is very good guidance. ASML's order intake continues to be very strong as a result, and we are closely aligned with our customers to support their demand in a combination of delivery of new systems and performance upgrades of their installed base. These business dynamics underpin our expectation that 2026 will be another growth year for all of our businesses. Very strong commentary by the CEO, a very strong outlook as well. Additionally, at the same time, you do still have a decent amount of share buybacks because the company does produce a very nice amount of free cash flow overall, repurchasing around $1.1 billion worth of shares under their current buyback arrangement and also paying a handsome little dividend. All in all, guys, the ASML earnings were very strong. Oops, that's a post from Elon Musk. Earnings were very strong for the company, but once again, that Q2 guidance just came in a little bit under the street's expectation. And as a result, it was the perfect criteria to lead to a little bit of consolidation, a little bit of profit taking. And as a matter of fact, it even dragged down many other either semiconductor equipment manufacturers or memory names or things of that nature, right? Very natural price action, in my humble opinion. It's just the perfect pretext, the perfect excuse to send some of these names in consolidation, especially since many of them, I mean, from the ceasefire lows, right? They're up like 20%, just ASML, let alone companies like SanDisk off of these lows, right? Was up 71%. So a decent day of profit taking and consolidation. I wouldn't really look too much further than that into it. In terms of whether the ASML company is a buy at current levels, well, you guys probably know my thoughts if you've been recurring viewers on the channel. I pounded the table so much in 2024 and early 2025 on this channel, saying that ASML was a screaming no-brainer buy because of their moat, their competitive advantages, and the fact that nobody makes machines of the way that they do, especially their advanced lithography machines, right? However, there's a time to buy some things, and then there's a time to just hold some things, right? That's why it's always a buy, hold, or sell. I'm not selling any shares up here, but also I'm personally not buying. If you take a look at the forward valuation, in terms of the forward price to earnings at around 14.50 where they are right now, it's a 40.5. That being said, they are growing EPS at 20% per year, but it's still not enough. The company's trading at a 2 peg right now. Not the most ideal valuation for the company. They're trading at 13 times forward sales and a 2.26% free cash flow yield, right? So unfortunately for me, ASML up here is not a buy, but it is definitely a big hold. I will continue to hold this company because of their competitive advantages, their moat, their operating profits and net profits, and the fact that overall, guys, there's nothing wrong with this business. Beautiful EPS expansion in the next 3-4 years, great visibility, great commentary by management, and great revenue structural growth as well over the next foreseeable future, next 3-4 years, let's call it, right? So I'm not saying if you buy up here, you're not going to make money. I'm just saying that everything is a price, right? And unfortunately, the price of ASML in relation to historical standards is still quite expensive, in my humble opinion. So there are possibly better deals in the market at current valuations. Those are my thoughts on ASML. Hopefully, you guys appreciate those. Now, let's move into some charts, shall we? So let's go over the indexes with the good old S&P that's up 10 in the last 11 sessions. So if we take a look at the RSI right here, we are getting into the slightly overbought territory. Now, as markets can stay oversold for longer than people expect, markets can also stay overbought for longer than people expect. We are at a historical point in time. 10 out of the last 11 days and 11 of the last 11 days on the QQQs is historic. So eventually you are going to get a pullback. However, when the pullback does occur, do we have bullish enough structure to create some higher lows? and then possibly continue the uptrend, provided that earnings are good. We know that currently the macro situation is somewhat in the back end of the thought process, right? What's front and center now for Wall Street and a lot of people are the corporate earnings. And so far, the bank earnings have been good. ASML showed us that the demand is still very strong. Tomorrow, we will get to hear from TSMC and Netflix, which will also give us more indications into, number one, the AI process and whether or not the demand is still very strong there. Quick little hint, it is. They gave us the revenue numbers last week, but we'll get to hear the commentary and the earnings guidance. And then Netflix, we will also get to hear from one of our first large cap tech companies, and then big earnings continue into next week. So in the event that the ceasefire is maintained and you don't get any major negative escalations in the Middle East, the market will start favoring a lot of these earnings prints as indications for direction, as opposed to being reactionary to headlines of a macro situation that's ongoing right now. So just keep that in mind. The market's pivoting from responding to negative element headlines. It's priced in most of those, and now we will move into the earnings regime, obviously. So if you go to the S&P, right, this is the futures just because it's cleaner, because the S&P is filled with gaps right here. Not that the gaps are not important, but we're very far off the most recent gap. What we ought to pay attention to is the price action structure here. Beautiful daily uptrend overall. The higher lows are set at the lows of this current Monday session. As you can see right now, we are up again in the futures market. And as a result, if we do pull back here, guys, you got a whole bunch of space. So if Monday's lows are the higher lows, just pay attention. I'll come back to the S&P right here. Monday's lows are your recent higher lows on the chart. We're coming through our all-time high area. We haven't breached it significantly enough to say that this area is cleared and that we can backtest as support. In the event that for some which reason tomorrow we unwind this price action and finish red on the day, suffice to say you got a very massive area below us. And the short-term EMAs are also curling up. They will probably meet the price halfway if you come into there, which is why I say it's going to be tough for the bears. Well, to get back to the lows, that's for sure. But it's even going to be tough for them with the renewed positioning from CTAs, retail, and call options, right? It's going to be tough for them to break through this area, 685 to 679. So keep that in mind. Retracement, we are now at this point looking for higher lows. For trend continuation, your weekly uptrend now, well, the weekly downtrend has just been canceled. And now we have an engulfing move. It's going to be incredibly difficult for the bears to swallow this up. You're going to have some major black swan event in the markets if that's to happen, right? The expectations when this move does top out is create daily higher lows, but also weekly higher lows, and possibly move into the regime of an uptrending cycle overall for your weekly charts. The monthly charts as well show a beautiful recovery throughout the month of April. So keep all of that in mind. Your retracement back to the 12 EMA has been completed, and you would not be surprised. I mean, look at all these market events, right? You come back, you kick back to the 12, you're not that extended anymore. You can go for an extra leg of extension before possibly rejoining the 12 EMA sometime down the road, possibly at the end of the summer, right? Just how we can possibly plan ahead for certain things, provided that the war in the Middle East does not re-escalate in a very big fashion. Moving on to the QQQs right now, same analysis. We have now cleared the all-time high region of support. Used to be resistance up until pretty much today, but you haven't cleared it in such a meaningful fashion that you can say, well, they're clearly going to be able to create some space and backtest and run, right? If we lose it from here, you could fall back one level, and that will be all the way down here to about 614 to about 606. Beautiful EMA clusters, which will be coming up into the price as the price kind of moves down. So you will have EMA support structure, but also a very solid level. Previous resistance, current support. Suffice to say, the bulls are in short-term control of these markets. On the weekly time frame, big weekly downtrend, beautiful engulfing move. As a result, if you lose this uptrending sequence and go into a daily downtrend, you'll just be looking for some weekly higher lows into possible price appreciation regimes. Monthly time frame so far looks very good. Your retracement down to the 12 EMA, such as we saw last April and several times in 2024 even. This looks very natural. Like if you didn't know what was going on and you just looked at this chart and said, well, the market moves in waves, right? Your wave down, get a wave of extension, possibly another wave down later on in the year. Midterms are notorious for that, especially into the fall. So we will see what happens. But as a result, guys, not predicting here, just taking it one day at a time. I'm just giving you expectations of results in the event that you break higher. Obviously, you'll be able to use this support level, and that would be your backtest location for further upswings. That'll be a beautiful, guys, beautiful breakout retest of the highs and run. In the event you can't do it and you need to pull back a little bit further, targeting swing trade longs from this area right here could be quite advantageous. Moving into financials, financials up 0.75%, clearing above their 200-day EMA. very solid, recapturing all the EMAs and the big resistance cluster, which was this whole zone right there. We've now broken through it. You see it best on the weekly, right? It was a pretty big level. Support for a long time, choppy price action, resistance, resistance. We've now cleared above it, and we're even making your way above the weekly EMAs. So weekly was a downtrend. This is a very nice bounce so far on the weekly fibs. It is a over 618 bounce, which means that in the event this move gets tired, even from here, well, number one, you got a fat support level, which is 5150 down to 50, all the EMAs, and a ton of room off of the lows to create the weekly uptrending cycle structure that we're looking to recapture here in financials as you kind of move away from the private credit headlines and everything else that's been kind of afflicting this trade since the start of the year. The banks are looking good, but not only that, the credit card companies, guys, finally, look at Visa, unable to claim their EMAs that much for the better part of, let's just say, all year, right? And now recapturing the 50-day EMA for the very first time. Nice uptrend sequence right there. Same thing can be said about MasterCard. Same thing, right? Recapturing the EMAs, nice push off the lows, daily uptrending situation. So maybe now they're finally ready to start a price action regime change and set the monthly lows on MasterCard, set the monthly lows on Visa, and maybe even the credit cards can play ball in XLF. The reason that that matters, guys, is that the banks cannot do it alone. I'll remind you, financials is a very wide ETF. You got the banks, which have posted good earnings, but credit cards are a big weight. And then insurance companies such as Berkshire, also a very large weight. And Berkshire hasn't really done anything. Berkshire, as a matter of fact, is quite interesting here. And as a matter of fact, all of the insurance players, guys, they haven't moved in so long, since the last 2 years. Looking good. You start getting some breakouts all across the board in financials. It's going to give some really nice lift to this XLF ETF, which is why I personally have leaps on the XLF ETF, not on individual names, but I do have leaps on XLF overall. I think that mostly financials can have a very good year. Moving on to healthcare right now. Healthcare still struggling a little bit into the area of support, 148 down about 145. So still a daily uptrend regime in terms of price action right now. The bulls will be looking to kind of reclaim this area for good and then move towards 151 and 153. But let's be honest, it hasn't been the best bounce, right? Healthcare arguably getting the weakest bounce so far, only a 38.2% move. So this one might be lagging a bit behind. I need to see a little bit more from the bulls here. Give me, excuse me, I'm flipping through the time frames too fast for you guys. I need to see a bounce to at least 151. Get me up there on the shorter term time frames, daily uptrend, get me up there. And then if you try and set a higher low and move back into this area, that's probably going to be an area and a trade style setup that I like for further upside continuation. Healthcare doesn't look too bad. It's not one of the sectors that I play most frequently, and it is the one that is lagging a little bit behind the rest of your market components right now. Moving on to SMH. SMH, very solid move. They started off negatively because of the fact that, well, ASML led to other players such as LRCX selling off a little bit from the top, AMAT selling off a little bit from the top, Micron selling off a little bit from the top. But you'll notice, and to the end of the day, they had some pretty good resilience here. Even Broadcom, right? Broadcom pushing again, and good old the big boy NVIDIA here also. They're waking up the sleeping giant, my friends. NVIDIA is starting to break out right now. So overall, across the board, semiconductor is not a bad day, just a little bit of a pullback in certain components because of the ASML price action. That being said, daily uptrend still in full bull control. Yes, overbought, but that doesn't mean anything, right? You can oscillate overbought and not while still being in a very nice, beautiful uptrending sequence. So a pullback would be very nice. If you get it, you'd be targeting these levels right here, 420 down about 407, the retest of the very same area of which we just broke out. The weekly time frame is looking amazing. Weekly downtrend, big engulfing move. Eventually, they will have to set the higher lows. We will see if that is starting tomorrow, if the market reacts for so much reason negatively to TSMC earnings. But suffice to say, SMH is gone, right? And there are fewer and fewer plays that are still available in this index overall that have not ran yet. You might remember I was highlighting about a month ago Marvell as one of the components that hadn't ran yet. Very interested. Made a lot of money on this one. Our Discord members with some leap call options. Very strong push off the lows right there. Even Broadcom. We were saying watch out for Broadcom. Broadcom's now made its move. We spent so much time pounding the table on NVIDIA. Now NVIDIA is making its move. We spent so much time on the channel as well, pounding the table on AMD. AMD making its move. So one after the other, the bigger components of your semiconductor landscape right now are starting to make moves, looking very strong overall. It's broadening out to include the bigger players right now, which is what you want to see. Moving on to the Russell also a very strong day, closing very near the all-time highs. Beautiful daily uptrending structure right now. As a result, in the event that the bulls get a little bit soft, well, you got a lot of space for the pullbacks here, guys. The weekly time frames show it best. Weekly downtrend, big engulfing move. So if you lose this area without claiming it a bit more, creating some space for the back test, right? If you just lose everything from here, right? Daily downtrend, something like that, rejecting from this overall area of price action, very simple. You would then just be looking for a weekly higher low to possibly go for the weekly uptrend structure shift. It's looking very good. I mean, the weekly MACD is also looking pretty good right now in terms of momentum follow through. So small caps, right? Whether you're playing the index ETF like this, or you're playing individual small caps, definitely something to pay attention to as we pivot into more of a risk on environment than we previously were in over the past few weeks. Hopefully you guys understand that. Now let's move into something different. The VIX coming down here, 18. Unless you get more escalation headlines, you would be very surprised if this one retests the mid 20s or even 30s level overall, but something to closely keep in mind, right? Now that the VIX is lower, we can then explore leap call options on some names that haven't ran as much as the others, as they'll now be cheaper on an implied volatility basis. But additionally, at the same time, if we're selling any options, guys, that's why I said back here was the most beautiful time to be selling options. But even at 18, it's not a bad environment to be selling options. You can still get some really good distance on most stocks out there in the market. So the VIX right now has normalized. It's not super low. It's not super high anymore, just right there in the middle. Moving on a little bit further here to our analysis on gold and silver. Gold, a little bit of a pullback today, but holding the structure. Daily uptrend is very clean and clear at the current time, above most of your EMAs. But we are struggling with this resistance range a bit. Notice the price hasn't been able to break here for the last few days. Let's call it the past 2 weeks, as a matter of fact. It was a very big area of interest. Cracked it. Now it's been a bit tough to mount and close above. So on a weekly basis, though, the price action is very clear, right? Weekly downtrend. This is a nice move. The size of this bounce is very, very clean on gold overall. It is a 55% bounce, meaning if you reject from this level, okay, and move into a daily downtrend sequence and retest these lows, it's going to be go time. Sizable bounce, looking for a higher low, going for a larger swing trade basis and re-expansion of the monthly time frame. So keep that in mind on gold. It does not look bad at all. And even silver does not look bad either, right? Beautiful daily uptrend on the silver chart. Coming into resistance right now, 84, down about 80 above the EMAs. Same concept, right? Silver, although the bounce hasn't been as strong as gold, it's catching up quickly, now over 50%, meaning if you are not able to break and close above this area and you move down into the support lows, well, you guys know what to do, right? Possible swing trade long area for the recapture of the eventual weekly uptrend, since now you're still in a downtrend and they got to reset it. The 1-2 step reset, right? It has to be done eventually. Not looking too bad. Price of oil, we won't spend too much time on this one because we know it moves with the headlines. Support right now, certainly currently about 90, down about 85 bucks. So we will see, in my opinion, guys, maybe the most short-term volatility is over in terms of the price of oil, but nobody is saying that it's not going to be sticky for the next, let's call it foreseeable future, 4, 6, 8 weeks type of thing. You would not be surprised if oil stays somewhat sticky here as the conflict kind of hopefully makes its way towards a conclusion. But we know the disruption has been already made in oil markets across the globe. And as a result, you will have higher for longer oil prices. But, you know, it would only be detrimental if oil goes above 120 and stays above 120 for 6 months. That's when you really start to see big demand destruction globally. So far, we are not there yet. We won't predict for that overall, just monitoring the price action on a day-to-day basis. No trades for me to beholden to headline metrics right now. So moving on to Bitcoin. Bitcoin down about 0.18%, but still making a nice move. We commented on this yesterday, right? This is possibly the first time that Bitcoin is going for a weekly uptrend in 6 months. So pay attention to it, right? Weekly uptrend will be a close above 75. We'll see if we can keep it. You are seeing the bulls attempt this, though. Out of support right now, 74 down to 66. And Ethereum is the same concept as well. Daily has been a nice uptrending sequence right now, recapturing the EMAs, but also on the weekly time frame, we haven't had a weekly uptrend. This is not a weekly uptrend. Double top and then fade. So you want to see a break and close above 2368. We're almost there right now. Break and close above, great. We got a weekly uptrend. We can set some structural stop losses and go for a bit of a monthly upswing higher. But I would like to see confirmation after having been faked out a number of times on these moves, okay? And we want to wait for confirmation. That's the best thing we can possibly do. So keep that in mind if you're looking at crypto right now. But you can see crypto has also benefited from that same risk on sentiment here in the past 2 weeks. It's not the biggest move, but it's a start. They're doing something they have not done in 6 months, which is a common theme for a lot of stocks in the market, right? Especially some of the ones we highlighted yesterday. We were looking at trend reversal trades at the end of yesterday's video. Now we're going to talk a lot about the risk on themes at the end of today's video too, and pay attention to them. So now let's move into big tech. I won't spend too much time on big tech overall, just a quick little summary of what happened today. So moving into our big tech names, number one is going to be Apple. Apple, beautiful move today, 3%, really completing the pattern that we were looking for here in terms of the uptrend expansion into resistance right now, 266 up to 277. A lot of space off the lows here, guys. Beautiful support below as well in the event we backtest here, 256 to about 245. Looking quite solid here on Apple. Weekly downtrend, the bulls are now going for it. They will have to complete the price action regime switch here in terms of the weekly. The monthly has always been very gorgeous, which is why we were saying swing trades from Apple here with the stop loss down below there, going for the monthly breakout pattern. We're not too bad of an idea, right? It's just that it's a bit rich to add to the long-term portfolio as the valuation is quite extended. Not my favorite deal in the market, but I'm not selling any of my Apple shares. Very strong company. Curious to see their earnings in a few weeks' time. On to AMD right now. AMD trying for the all-time highs, 263 down to 254. It's been a beautiful sequence of rally on AMD. Yes, it is overbought, but keep in mind AMD can get more overbought and stay overbought for extended periods of time. So this is not a sell indicator on its own, right? What you would need to see is a clear rejection in price action. You'll notice the smaller timeframes here, they have not lost the 4-hour uptrend this entire time during this 10-day sequence. So pay attention if you're looking for reversal points. You got to reverse these smaller timeframes first, right? The bulls are looking very strong right here. In the event you reject from here, the closest area of support that you would have is down below here, 230 down to 220. Could be a reload zone in the event we get pulled back from the overall markets. Very interesting location to keep in mind. The weekly is looking excessively strong right now. Beautiful cross of the MACD. This is the first time you've had a cross on the MACD. It's in the past 6 months, or let's say, 4 months since December, right? We're negative momentum, consolidation. AMD was a fantastic pickup up here. Up here at 260, guys, it's like at the limit, right? Add 10% of this valuation. You're trading it right now at a 36, 37 times forward PE, a 1.1 peg. It's not bad, but if you want to get the best out of our compound annual growth rates and take advantage of these beautiful revenue and EPS growth rates over the next few years and the long-term thesis, you can't be buying at any price, right? So I was very vocal on the fact that I don't really want to buy AMD much above 220. This is like the limit, okay? So there are times to buy some things. We talked about this during ASML earnings. There are times to buy some things to accumulate, and there's some times to just let them run. At the current moment, I'm not adding AMD. I'm just letting my leaps that I have and also my shares, I'm just letting them run at the current time, right? And taking advantage of the long-term thesis, but the chart looks very strong. Moving on to Amazon right now. Amazon also very strong breakout move by this company right here, almost at 250. Not quite the all-time highs. Amazon has earnings coming up pretty much in about 2 weeks' time. And that being said, in the event that you top out right here, it's a little bit overbought, but keep in mind on the short-term timeframes, no loss of the 4-hour. Yes, we're overbought. That is not a sell criteria on its own. You lose the 4-hour time frame, consolidation down here, back to the back test, 240 down about 227. That would be the reload area, so pay attention to it. Weekly uptrend, very nice. Back testing, looking for forward longs is not a bad proposition at all. Amazon also is now beyond my cutoff point. Was very vocal about this. I'm willing to be a buyer under 225. I'm not saying that if you buy shares of Amazon up here for the next 5-10 years, you won't make money, but there comes a point in time where even I have cutoff areas, and for me, it was 225. You push it to the most, it's about 240 for me. I'm not personally adding up here. I don't blame anybody for adding up here, but it's just if you want to have the best compound annual growth rate, best price is like 225 or lower, which is why I spent so much time talking about leaps down here on Amazon and longer term shares. So congratulations to all of you that participated in this Amazon rally so far. Valuation above 240 is now back to a 31 forward PE and a 1.54 peg. Not terrible valuations, right? But I would say that Amazon now is back to fair value, no longer undervalued by most metrics. Moving on to Google right now. Google, strong push, another 1.18%. Beautiful daily uptrend by Google right here, not even bothering for the back test of most of the meat of the support level above the EMAs as well. So very beautiful price action change. 4-hour also never losing the 4-hour uptrend. Yes, we're slightly overbought, but that's not a criteria to sell, right? Google bulls can possibly come into the all-time highs. In the event that you reverse, what are we looking for here, guys? You guys guessed it, right? You'd be looking for the weekly higher lows. Down here would be the reload section around the $300 range. If for every which reason we make our way down there, but Google is looking very strong so far. Up here at 334, I mean, you guys know me, right? There was a nibble down here on Google for me. Decent, slightly undervalued region would have been 250. It never got there. This was the only nibble criteria, pretty much under 290 down to 275, increasing the size of the buys if you were moving there. Here at 335, it's the same thing as many other names, right? Not saying if you buy up here, you won't make any money. There's times to buy things and there's time to hold things. For me, Google up here is a hold. At 310, I mean, add almost 10% to this valuation, right? You're back to a 34 PE, getting very close again to a 2 peg. So not my favorite buy in the market, just holding and riding the shares that I have. On to Meta. Meta up 1.37%. Very strong push off the lows as well on Meta. Beautiful daily uptrend. And you're not quite daily overbought. 4-hour uptrend as well. Very solid. That being said, into resistance soon. 680 up to 705. We're back into the same area of price action that we've been kind of, I would say, like if you drive an average price, the average price is right around here, like 660, 650 for what? The past 4 months. So is Meta still a buy? Well, even if we back to support, yes. Support 650 down to 630 will be the reload zone for possible further swing trade longs. But I mean, look at the weekly. Okay, weekly downtrend, big engulfing move. The bulls have so much space to reset weekly uptrends on so many of these charts. Okay, but also Meta, unlike the other companies we just talked about, Meta is still a buy. Even at 671, just add 5% of these valuations, low 20s multiple, low peg ratio as well. So keep that in mind. Meta is still a very advantageous buy, and I will still be adding some shares. There comes a point in time where I won't be interested in Meta anymore. For me, that's above 700. I mean, the buys were heavier for me down here. Still part of my DCA plan, but when we start cracking 700, not the valuation is going to be super expensive. It's just I'll be full at that moment in time. On to Microsoft right now. Microsoft 4.61% day. People counted this one down and out, and it was a big old downtrend for so long. The bears were in full control of this chart. And now look, some things have changed, right? Number one, beautiful daily uptrend, recapture the 50-day EMA. When's the last time Microsoft had the 50-day EMA? You'd have to go back here to October, okay? Big price action shift right now that you got to pay attention to. Above areas of support right now, 400 down to 380. I think that the Microsoft lows are actually in similar to where they were last April. We are now back above the 200 weekly moving average as well. And look at this big weekly engulfing move. 100% engulfer of the most recent leg of selling. Look at your MACD. It's starting to curl around after being negative for how long? Since September? We're curling back around. So one by one, Microsoft will be resetting the timeframes. First comes the daily. Then we will have to reset the weekly timeframes. Overhead resistance right now, 425 up to about 450, which is that big area of price right there. It'll be challenging to get through. Maybe they won't get through it in one clean shot. But if they do this, you guys know exactly what to look for, because then you'd be looking for the monthly lows to be set and going for the further swing expansion. Valuation up here at 411, just add 10% to this. It's about a 24, 25 forward PE and about a 1.3, 1.35 peg. Still cheap. Am I buying Microsoft down here still? Absolutely. I'll buy Microsoft so long as it's under roughly 440. That's usually where I've been interested in it. The buys would be heavier down here. Still waiting the DCA up through 440, but that will be it for me beyond that. Moving on to Netflix right now. Netflix has earnings tomorrow, 1.35% day. Such beautiful price action continuation by Netflix. This was like a textbook trade, guys. Weekly downtrend. See, this is what you're going to be looking for the rest of big tech, right? Downtrend, nice size bounce, reset the weekly uptrend. Very clean price action from Netflix. Overhead resistance, 110 up to 115. We'll see if they can get there with the earnings bump. In the event you sell off, you've created so much space off these lows. The lows, 90.5. Even if we sell off after earnings, that's going to be a reload zone into support, right? 98 down to roughly 90 for any swing trade longs. So pay attention to that. We'll cover earnings on the channel tomorrow, and we'll redo this valuation with their guidance at the same time. Moving on to NVIDIA. So good old NVIDIA now, almost making its way above 200. They got there for a brief moment in time, and unfortunately the market said no. Probably a whole bunch of covered call options and things like that. Probably a big options wall at 200. You would not be surprised. It's one of the most traded stocks in the entire market. Suffice to say though, price action is super clean for NVIDIA. So now tons of space off the lows to reset, but also if they can go for the expansion easily, very easily go for the expansion too. It's a coiled up spring. It has been consolidating for so long since the month of August. Look at the MACD, okay? Negative momentum for so long, it's now shifting. Weekly downtrend, big engulfing move. Even if you retrace, guys, it's going to be last chance to dance for NVIDIA, in my humble opinion, on the back tests of these big old regions that we're breaking through right now. I put a line there, but in all reality, you guys know I like my little boxes, right? So clean area of price action right there. In the event you come a bit lower, I'm going to play the wheel strategy, selling puts down here. And now it's going to be the last chance for me to DCA my NVIDIA shares, anything that I want. I've been buying NVIDIA for the past like 5-6 months below 180. I would not mind adding to it a little bit here into the 190s, but after that, I will be done. I have all the leaps that I want on the company, all the shares that I want. Now, in my opinion, it is time to ride. NVIDIA at 195, still a very fair valuation overall, at about a 23.6 forward multiple and a 1 peg. Moving on to Tesla right now. Tesla, a huge day, 7.6%. They released their new AI5 self-driving chip. Very strong. And this was what I was telling you guys about price action structure changes, right? Tesla was lagging a lot. No daily uptrend for the past 4 or 5 months. Look what happened today. Big engulfing move, reclaiming most of your EMAs. We have not been able to reclaim the 50 EMA, guys, okay, except for this one little moment in time in January, right? But you can clearly see, right, swallowing all the EMAs, coming to the 200 in one clean sweep. If Tesla offers any retest, they do have earnings next week, so pay attention to that one. If Tesla offers any resets, you might be able to scale into some swing trade longs, as now the bulls are trying to change the price action, right? So this is what we're waiting for. When you're looking at a big extended downtrend, you're looking for clues that the downtrend is possibly finished. And this is a very big one overall with this very big push. Resistance is still 405 to about 385. On to Palantir right now. Palantir also making some good gains today, 4.75% into resistance, 148 down about 140. It's not a huge level, right? But it is the closest one that you have in terms of resistance and support area. So a little cluster of price action, and also the EMAs are in this zone too. But Palantir has a lot of work to do, right? Daily downtrend. It's a nice bounce size. Got to give it to him, right? It is a very decent bounce size from the lows, about 55% right now. So if you get rejected from here, the bulls will have a chance to reset this and try to reclaim it in 2 batches. Best case scenario is just give me the full engulfing, reclaim the zone, and then we can also position for some further longs. I'm buying Palantir under 145. So I've had some fun buying it recently, but that fun may stop soon. Just all the buys that I kind of got rid of up here. I've been reaccumulating after their earnings. You might remember back in February when I was in Asia, after the earnings, I was saying, yeah, I'm buying Palantir down here again. And most recently here as well. At 135 right now, roughly where they are, they're trading about a 2 peg. Price to earnings is very high. Price to sales is very high, but in relation to their earnings growth, not that bad. But once again, if you are buying Palantir here, you got to buy it with like a 5-10 year time horizon for the long term. If not, you cannot make sense of this valuation. And swing trades for me, at least, are on pause until you just give me some price action structure shifts. Moving on to SOFI right now. SOFI up 5%. We talked about this one, right? Especially previously here the day before on Monday and Tuesday. Watch the price action change. And now the price, well, it's more like this. Price action has now changed. After months and months and months since January of negative price action, no EMAs, you're now recapturing everything, creating a lot of space above the higher lows, which are 1590. So any move lower, higher lows, possibly going for a bit more. SOFI has a lot of recovery to do, a lot. This weekly downtrend was no joke, right? So keep that in mind. A lot of work to do. Momentum is shifting progressively on SOFI right now. Upside targets remain 21 up to about $25. Right now where it stands at about 19. I mean, it's not the deal that it was in this area right here, but still fair in my humble opinion. Just going to redo it. Oops, I don't know why I deleted everything right there. Oops, my bad. So 19 right now, 19 right now. I mean, they have their earnings coming up in a few weeks. They should have very good earnings, but let's just do it all together right now. Just so you guys understand where they're kind of sitting for the valuation. Revenue EPS growth is very good. 19 by 0.6 right now. It's about a 31.6. It might seem a bit high, but keep in mind they are growing at 33% per year on EPS for the next few years on average. So that's about a 0.96 peg. Still a very decent valuation overall for long-term buys, even if you are significantly off the lows. So price action is good. Swing trade longs are initiated. I've started my leaps on SOFI overall too. Moving well so far. And any buys made down there moving well so far as well. But you could just get stuck here until earnings, right? Suffice to say, you wanted the bulls to hold this support range, 17 and a 14, which was a huge area. It was like a must hold area, and they did. So let's see if they can keep going. Moving on further to Uber right now. So Uber also a very beautiful day, 6% to the upside. We talked about Uber recently. It was lagging. And now I was telling you guys, wait for the price action structure change. When's the last time we cleared the 50 EMA with this much momentum? We've peaked above it a few times, got rejected every single time, right? But clearly not since November have you gotten such a beautiful close above the 50 right here, right? So keep that in mind. It is now a very awkward but efficient daily uptrend. So higher lows down here, 69.79. You're looking for further upside continuation on Uber. Uber on the weekly, double lows, double bottom here. Close the weekly above 79. And that's a weekly uptrend again. Weekly uptrend means your monthly lows are set. And you might just be looking for the expansion phase of Uber, which is why I've been having a lot of fun in the lower 70s, adding to the long-term portfolio. Is it still a buy up here at 77? Or are you too late? Not too late at all. Add 10% to this. It'll be a 22, 23 forward PE at about a 1.10, 1.15 peg with a nice free cash flow yield. Not late at all. Company is still relatively cheap for a long-term portfolio basis. Last but not least, TSM. We're not going to comment too much on the price action here because they have earnings tomorrow. Stock is probably going to move 5 to 7%, which would put you either above the all-time highs or possibly back to these structure lows. In the event we revisit these areas, pay special attention. Could be a very nice reload area for some structural longs, just weekly consolidation, right? Breakout. Now the bulls have engulfed. You get a little bit more consolidation. It's going to look like a bull flag pretty much, right? And that would be the perfect scenario if I'm looking to reposition for some TSM swings or something like that. Not tremendous size, but just a trade idea on a back test down here. We will cover their earnings tomorrow after the close, but not too much commentary right now, just because this one will move 5% up, 5% down, just like you saw with ASML today too. So that's everything for our overall market rundown. Hopefully you guys enjoyed. Now the video is already a bit long, so I'll spend some time on these biggest gainers and losers, but not a tremendous amount of time. So let's get into it. Okay, so what I want to start off with here, guys, is the risk-on sentiment of the markets. Usually when you are building a bit more confidence in the markets, you'll start to see some risk-on trades start to work, whereas before they were not. So you'll notice yesterday's entire video was focused on trend changes, right? So keep in mind, you got a bit of a trend change here, attempt on IONQ, on some of these other quantum computing names like Rigetti, right? Clearing the 50 EMA, doing something that they haven't done successfully in a very long time at this current point. Daily uptrend, reclaiming your EMAs. That's Rigetti. You look at QBTS. I'm not going to go through all of them, right? But you can clearly see that the dynamic is changing here and big moves on these names today. Pretty much good visibility in terms of the risk on sentiment, but also other names like Oklo, right? Pre-revenue companies clearing their 50-day EMAs as well. Nice daily trend change. So it lets you know, I'm not saying to buy these. I'm just saying these can be a barometer of the risk on sentiment. We have to kind of pay attention to them. Yesterday, we went through a bunch of trend change names that have been down for a substantially long period of time, right? We were talking about Robinhood yesterday. We were talking about Oracle for the trend change as well, which they follow through on today above the 50-day EMA. It just creates a lot of space off the lows to reset the sequence here on the daily, to reset the sequences on the weekly timeframes. And you might just be looking for a couple larger moves that may be in effect. We talked about Reddit as well. That one also got some fall through today above the 50-day EMA. So just pay attention to some of these names that have been out of favor for a while. I'm not saying buy everything. I'm just saying if you're looking for trend reversal trades, there are quite a few on the table right now. And since the risk on sentiment is a bit more favorable, well, it means that these names may actually get follow through this time and successfully reverse even their weekly downtrends sequence by sequence, not overnight. And you also got to keep in mind, if you get an index pullback, okay, these names will also pull back, but you do have tradable bottoms that have been set. That is the moral of the story, right? So if you're waiting for pullbacks, no problem at all. As a matter of fact, we're going to get pullbacks across the board here. Take a look at SanDisk, right? Look at this weekly time frame, right? Look at this weekly candle. If you get a pullback, you know exactly what you're looking for here. You're just looking for the breakout retests, right? Retests of where their previous higher levels, right? Under 800, if SanDisk pulls back a little bit more, decent. Pay attention to that one too. Micron, same concept, right? Beautiful rally off the lows, pull back here into the EMAs and your previous price action structure. Pay attention to it, right? They're just going for possibly just resets on the weekly timeframes right here. The way that I like playing some of these memory names, guys, you guys know me, I like playing DRAM. So in the event DRAM comes down to like 33 bucks or something like that, I'll probably add a couple more shares. DRAM is just, it's Micron, it's SK Hynix, it's Samsung, a little bit of SanDisk, a little bit of WDC, a little bit of Kioxia, and a few other Japanese names. It's a concentrated ETF. So if you don't want to play these names individually, if they're too volatile for you individually or too expensive for you on a per share basis, you can consider this ETF. That's how I'm kind of making some of these buys. Photonics as well, into a bit of a consolidation phase, right? Take a look at some names like VIAV. I mean, it's the first one on my list, so we'll talk about it, right? I mean, they've held these 12 and 26 EMAs for the longest time. It is a gorgeous uptrend, gorgeous uptrend. So playing into some of these areas of consolidation, right? You just got to wait for it, right? The daily downtrends come in, 4-hour downtrends are set. You just got to wait for them to kind of change the trends around type of stuff. then we can possibly explore some further swing trade longs, whether it's on this one or Lumentum Holdings, right? Coming right back down to your area. Pay attention to our EMAs. Haven't lost these EMAs for a while. Just a little bit of weekly consolidation. Not surprising at all that some of these names are consolidating. Amcor, same concept. You get some consolidation into formal highs, into the EMAs. You guys know where to explore some of these swing trading opportunities. I'm not going to go through every single one. It would take forever, you know, but just pay attention to some of the retests. NBIS is gone. I was hoping to pull up this chart and, you know, see maybe a back test. It's gone, right? It's gone at this point. It's too high, extended from the EMAs. But if you're looking for retests, right, there are a few names that might give them to you in the near-term future. So just pay attention to some of those names if you're interested in photonics or the cloud providers or stuff like that, right? Like CoreWeave into resistance right now. If you get a bit of a back test down here, want to be opposed to it, right? All the EMAs are down there, big price action structure. So you see what I'm looking for? I'm looking for retests of the EMAs, retests of former price action. And for names that are just gone, I'm just letting them go at this point. Like this one's gone. Celestica is gone. I mean, maybe give me a retest here. I'll put a little box for you guys just to visualize. Give me a retest of your former highs in the EMAs. We can talk for another leg of rally, right? But I'm not going to chase at any given price. If they're gone, they're gone. There are many other opportunities in the market at any single time. Credo as well, which had a beautiful rally recently. This one is starting to really go. It's really starting to go, right? However, on any back tests, I'd be highly interested. We highlighted this one on the channel down here. So don't be upset at me if it's ran far away already, right? Even a name like Marvell. Marvell's just like gone, 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 gone. However, give me a back test of these former all-time highs. Give me a back test of these short-term EMAs into the 120, 110. We can maybe talk about some further swing trades. So I'm looking for breakout retests on a lot of favorable things in semiconductor infrastructure, et cetera, et cetera, et cetera. But I'm also looking for trend change names on things like Oracle, on things like Robinhood that we've highlighted, on things like Reddit at the same time, right? So keep those in mind, right? Trend continuation trades, looking for breakout retests, but also trend changes altogether of long-standing downtrends that are currently experiencing trend shifts right now, right? So keep that in mind for both of those. Now, if we want to go through names, you know, in terms of thematic names individually, some themes will move faster than others, guys. So one of them that's been lagging behind a little bit in recent memory is the drones, right? So KTOS, so these, the price action structure is not the best, right? We haven't recaptured the daily uptrends, nor most of the EMAs. So I can't really say that these are ready for, you know, sizable swing trade longs as of yet. But I am still having a lot of fun accumulating these at lows. Some of these names I want to hold for the next few years. So I'm taking advantage of these declines on KTOS, AVAV to build long positions, but I don't have any immediate swing trades on them because as you can see, we haven't done the price action change yet. There will come a time that maybe they will be more advantageous for swing trades, but not yet. Even a company like Ondas, right? It's trying, but it's not there yet. Even OSS, one of my edge compute names, they're further along. This one is looking good. I built some shares into these lows, and I'm happily riding. No swing trades for me, but drones and defense, even large cap defense names, right, guys? Large cap defense right here, ITA, rather than going through these names individually, right? I mean, you look at RTX. RTX is relatively solid still. LMT has been consolidating just into its monthly consolidation phase. So some of these needed to pull back, like LHX as well. That one had a bit of a pullback here. It's holding structure. Some of these charts look better than others, but I'm just playing the ETF, right? We've recaptured the EMAs, the wartime sell-off period, and now you got the bit of the expansion period right there. All we did is just cool off the higher time frames a little bit of a retest, right? Monthly 12 EMA retest, and this chart still looks good. A lot of military spending in the future. So drones and defense, not the ones with the most momentum right now, but definitely very interesting. Like large cap aerospace and defense, I'm playing for a bit of a swing trade on the recapture of these EMAs. Small for me, call debit spreads. But some of the drone and defense names, I'm just playing accumulation, right? Like Ondas accumulating shares, OSS for me accumulating shares, KTOS accumulating shares. Then you have other themes that have also cooled down a little bit. One of them is a space theme, right? Although today it was pretty strong. So NASA ETF, pay attention to it. It has a lot of SpaceX, a lot of people's favorite stocks in there too. So nothing wrong with playing ETFs, guys, right? As long as they're somewhat concentrated into a certain theme and there's no fillers, right? So like NVIDIA is not in this one, right? I don't want to see filler names in my thematic ETFs. I want them to be pure play thematic ETFs. Like DRAM is just pure memory. This one is pure space. But if you take a look at some of the names on space individually, they're not all built the same. Rocket Lab is looking really good, really good. Recapture the EMAs, daily uptrend, out of support again, looking really good for some possible expansion. ASTS came down after the Amazon news yesterday. Not too bad though, holding support as well. Rocket Lab just has the better chart for the current breakout right now. Take a look at some of the smaller ones. Planet Labs, very nice chart structure right here as well. The valuation on this one is a bit extended, I will admit, but the entire space trade is a bit extended. So I'm not playing Planet Labs from here, but if I was in from earlier, I'm definitely not selling anything. And Fly, which has been on everybody's radar recently, they've just completed their back test of the 12 EMA, back test of this little area of price action right there too on the daily time frame. So it doesn't look too bad overall, right? Like some of these space names have a lot of momentum, but still in accumulation phase. Selling put options down here, and even if it comes back there for the full weekly retrace, it is support is decent, but I'm also holding my longs that I built on Fly back here in the high 20s area. Just a few to pay attention to. Voyager as well, looking decent above this entire area. They're looking for the breakout, retest, and possibly run above the EMAs. So there's a lot of key players here. Iridium is very, very, very strong right now with the Golden Gnome contracts. Pure breakout on Iridium right now above the monthly EMAs. Watch this one as well, but in the event that you don't want to watch them individually, you can just play the NASA ETF overall if you're more in line with that. So those are just a few of the key themes that I haven't talked about much in the past few days. I think that's it. We covered memory, we've covered space, we've covered drones and defense, we've covered energy and whatnot. We'll cover more energy stuff tomorrow. We've covered the large defense players as well. Just running through the key themes in my head. I mean, battery energy storage and solar, we'll cover that tomorrow as well. So just for you guys to pay attention, right, to various forms, whatever you're looking for, whether it's, photonics on the pullbacks, whether it's memory on the pullbacks, whether it's the space theme, whether it's the drone and defense names that are a bit slower recently, I will admit. Nuclear, pay attention to nuclear as well, guys. NUKZ is the ETF. It looks ready, okay? It looks ready. A lot of these names individually also look pretty good. CCJ looks pretty good, clean chart. CEG, Constellation Energy, they have a lot of catching up to do. CCJ has the better chart. This one lagging behind a little bit. But other players that have been out of favor for a long time, such as LEU, establishing nice structure. I'm still waiting for a bit better price action here. UEC, this one has a very clean chart. What we're looking for here, the price action structure change, breaking above, possibly trying to go for the higher time frame swing. So there's a couple of them, but if you just want to play, if you didn't know the nuclear names individually, NUKZ, arguably my favorite nuclear ETF. I have this one. It's a long-term hold for me. This is a core theme that's going to be available for the next 3 to 5 years through the data center build out, and also through many countries across the world rekindling their nuclear endeavors overall. So pay attention to it. There's many themes in this market that we can trade. And I haven't even talked about the engineering side of things, or we'll try to cover a bit of that tomorrow. So many key themes with a lot of momentum, some in trend continuation styles of trades, some in trend reversal styles of trades. So there is something for everybody in this market, and even the long-term companies, right? For the long-term portfolios, there's still so many great deals out there. Visa, MasterCard, American Express, SPGI, some of the big tech names as well are still at very attractive levels. We went through those earlier, and many other names that we covered last week as well. Booking.com, one of my core holdings. Uber, another one of my core holdings. Mercado Libre is still at a very attractive price right now. There are Shopify, right? It's still a very good deal down here, in my humble opinion. There's many names, many high quality, long-term portfolio names that are still available in the markets, okay? That you don't have to chase necessarily, right? Many things for everybody in this market, guys. So if you're looking at these indexes and thinking, oh man, I missed the rally, that's it, I'll wait for a pullback. It's out, yeah, but build your list of what you want to do on the pullback, right? Do you want to play trend continuation pullbacks from memory or photonics? Get ready for them. Prepare your levels, right? Do you want to play? Are you looking for long-term portfolio companies on reentries? Pay attention to them. Build your shopping list. Now's the time to do it. Not just say, oh, well, I'll wait for a pullback to happen, and then you're kind of scrambling to generate some ideas for long-term investments or for some trades, right? So pay attention to them. I've shown you guys what I'm a lot paying attention to for trend reversal plays. I've shown you guys what themes I'm paying attention to for trend continuation plays. I'm showing you guys which themes I'm slowly building into for long-term positions because they don't have the momentum just yet. So keep all of that in mind, right? I said I wouldn't go too long, but once again, I've gone way over. But that's everything I had for you guys today. Hopefully you guys enjoyed today's video. If you did, you know what to do. Drop me a like and possibly subscribe to the channel. We'd love to have you guys back here watching the videos with me. And last but not least, if you have any questions or comments, or if you guys are looking at any stocks that I have not mentioned, feel free to mention them in the comment section. Always love reading what you guys are looking into as well. Hopefully you guys have had a good week in the market so far. And let's see what we get tomorrow. I'll see you guys after the close tomorrow, where we will recap TSMC and Netflix earnings. Best of luck. I wish you guys well. See you guys tomorrow. Peace.